All right. Looks like we're live. Okay, we are live. Welcome to the stream. This is February 2nd, 2021. And I'm joined here on the stream tonight by your co-host tonight is Micah. She's going to be joining us and giving insights on retail and the retail world and a whole lot of other things. So the camera is new. We didn't. This is the first time on this stream we've had the camera. So if there's any problems with that or if it's a little funny, sorry. We'll get all those issues worked out. So topics tonight. We're going to talk about GameStop some more and AMC. These are huge in the news stocks. We're going to talk a little bit more about gold and silver and miners. And we'll probably look at some options trades. So first news up is the GameStop price move is huge. And I'm going to pop up the GME chart. Let's take a look at this. So this is a weekly chart. Let me adjust the zoom on it so that it's really easy to see. All right. What a candle. So, wow. It's down 72% for the week. And this is Wednesday. Let me make this a little bigger. There we go. That's a beautiful chart. Okay, you guys can probably see that. So GME shares, GameStop, closed down at, to $90 a share. And that's big news. So let's talk about the turnaround story that is GameStop. I was listening to Brian Jung's stream today for quite a bit. I've actually been listening to it for, I guess, almost a week now. He's had a lot of really entertaining and informative guests on there. And when I first tuned into the stream, it was kind of a rookie show or a rookie take on GameStop. It's, hey, we're on the Reddit team. We're cheerleading the shares, and it has changed into, in a very short time, into something that is, it's not rookie. The quality of guests on Brian's live stream during trading hours is pretty good. This broadcast, at least for now, is happening outside of trading hours. I'm really busy during trading hours, and as are probably a lot of traders. So, anyways. The stream turned today to the turnaround story. Brian said that he wasn't even intending to stream today. And he decided that, well, the shares are down a bunch. And so probably I feel like the right thing to do is to show up and do the stream. And I love what they talked about today. They were talking about the turnaround story for GameStop and for AMC. What they were some of the ideas they had, it was a really great brainstorm. Some of the ideas they had were maybe like a fusion between these two ideas of gaming and of movie theaters. So an idea they had was if you put esports in the movie theaters, do you think that could work? So, sort of like how sports bars show sports, right? And that is a big draw. Well, what if movie theaters showed big esports gaming events? I mean, theaters typically have teenagers and young adults as their primary demographic, I would think. And So it sounded like a great idea. That was one idea they had during the brainstorm. What's your take on that, Micah?
Well, I mean, people are already paying for pay-per-view. You could probably charge a lot more and probably salvage the theater industry with that idea.
Yeah, it could. I mean, you guys could see probably behind me. There's a Dota gaming chair, and the backdrop. It's Dota characters, so that's Defense of the Ancients. Really fun game. I love watching the events. They have a multi-million-dollar tournament pretty much every year. And that's just one. The big one, I forget the name of it. I should know that because I watch it most years. It's probably a few months away, but there's always big gaming tournaments and for big cash prizes. And so maybe movie theaters teaming up with esports. I love the idea. It sounds fun. And then we were just at Micro Center. Now we're going to shift over to GameStop for just a minute. We were just at Micro Center, which is really the computer superstore in St. Louis. Think Best Buy, but with a focus for computers and technology. They have every kind of gadget. It's such a fun store to be in. And we were there getting this web camera. So far, so good. We got some helpful advice on that. And the guy was telling us a story about, I went there a few days ago, and they had a line out in front of the store. And I said, is it like that? Is it every morning? What were these people doing? And maybe you want to recount from your perspective that conversation with the person in the store who was helping us.
Well, I mean, they're pretty much people that are buying cards.
Right.
Yeah.
Video cards.
Video cards, and they are selling them for double the price online.
Yeah, there's like a second-hand market for these cards because I guess there's a new generation of NVIDIA cards that just came out. So let's talk about NVIDIA shares a little bit too today. I want to talk some momentum stocks. Let's get NVIDIA up, and we'll talk about that for a moment. He also mentioned another company too that people were lining up for. So here's NVIDIA. This is a weekly chart. Looks like a real nice flat base going on. He mentioned not just NVIDIA, but AMD also. Like people are lining up outside the store. And so an opportunity for GameStop here is to compete in that space because while we have Micro Center in St. Louis, there isn't a Micro Center everywhere. There may be a few stores like that in cities, but the nice thing about GameStop is they have these retail stores all over the country. And so if they can tap into that market for computer hardware, that could be big. It could be bringing sort of like the Micro Center experience in St. Louis, bringing that to really all across America outside of cities, and or not just in cities. So it seems like a good opportunity could be there. And there may be enough gamers now on the GameStop that are big GameStop shareholders that can maybe become influential with the board of the company and maybe get those kind of decisions made. So the talk today on Brian's stream was, yeah, GameStop shares are down a lot, and it's really scary for all of us, but is there a story here, like a real value story? And maybe the value isn't at $90. Maybe, instead, like here we are just a month ago, and the shares are at 20. Well, is there a story, a turnaround story here that could give these shares a sustainable valuation at $50 or $100 a share? Maybe we see these kinds of things. I mean, just look at NVIDIA's stock. It's up a lot. Look at this rise, and this is being sustained. So even though GameStop's down a lot, like maybe there's a triple digit price that's sustainable with the right business model. And having gamers involved in GameStop shares maybe could be a factor that could bring that about. So anyway, Brian Jung's stream has been kind of a melting pot of a lot of ideas right now around GameStop. I've been enjoying it. So that's that bit for tonight. So let's talk about NVIDIA real quick. I have a position in this. It's a pretty short-term options trade. The idea here is if there's an imminent breakout that I have a position that will capture it. And it's a trade that if it doesn't work out right away, that it needs to be rolled or managed. So I'm not going to show the exact trade because I don't remember it exactly, but let's just look at a combo that's kind of like what the kind of trade that I'm putting on here. So we talked about back spreads last night, and this is also a back spread. So let's build one. I'm just going to dynamically do this. We're gonna sell an in the money call here. Is this? Let's see here. It's NVIDIA is. Where was the current price for? Oh, right there. $543 a share. So let's go over here into the daily. I'm going to look at the daily ATR just to get a feel for where that is. Okay, it's around 17. So let's go about $20 lower and sell a call there to finance buying more calls that are out of the money. And we're going to build this as a combo, and it would be executed as one trade at IB. So let's go down 20 points lower, 525, just sell one of those. So we've got $23 to play with. Let's maybe buy one slightly in the money here for 15. Now we have $8 more. We can buy one here, or we can buy two right here. So let's actually take a quick look at both of these. And I'll show you how explosive this can get. And then we'll keep moving because I don't want to stick on NVIDIA. Let me edit this to be 2. So we're selling one option and buying 3 in this example. And so this is a back spread that has explosive growth potential. This trade for a margin of $1,500, and you get a small credit when you put the trade on. If you don't hold it for very long, like let's look at it on Friday. Probably I would want to be out of this on Friday and rolling into something with a longer time frame. So this trade, this position would be 2 weeks out. The problem is if you hold it, you get into next week and the shares aren't moving, you really start to fall into this valley of loss down here. So you've got $1,500 at risk. And if NVIDIA pops 30%, because the implied volatility is pretty low on it right now, NVIDIA, you could be making about $25,000 on this trade. But that's if it breaks out and runs 30% by Friday. And the actual profit may be slightly higher if the implied volatility rises. And if the shares fall, you're not really losing much either. If they sit still, you lose, you're looking at being down $350 in that range. Again, these are just estimates because the implied volatility going up and down will affect these options because it's a back spread. So we're holding more options than what we've sold, and so that those kinds of positions are affected quite a bit by implied volatility. So let's just look at one more thing before we jump to the next topic. We're going to look at if we just bought a single option, or a single one instead of a double one at the top end here. And so it doesn't have anywhere near the same explosive growth potential, but it's got a very similar risk profile. What you can expect from this one is that it would have slightly less time decay. So if we look at the estimates in the simulator for Friday, you can see that it's down slightly less if the shares don't go anywhere. And so I would be looking to roll a trade like this on Friday. If you keep rolling a trade like this and you get into options expiration week, what happens is you'll have to post more margin for it because the options get more expensive and it also it can tend to have more time decay, and it looks a little different than this graph. So I mean, you can look into it for yourself on situations where there's options expiration in the week that you're trying to put a trade like this together. This is a really short-term trading idea. We can look at longer-term ones, but I want to move on and talk about gold and silver a little bit. So Micah's got some views on this about should you be holding gold or should you be holding silver, or I mean it's different for everybody, right? But I don't know if you want to talk about like your preferences or your take about gold versus silver.
Well, I mean, I've told you how I feel about silver. There's a lot more uses for it industrially, and gold at this point is not as useful in our economy. So I am a much bigger fan of silver than I am of gold.
All right. And it looks like, there hasn't been much of a move in gold, but you can see this kind of rising trend line coming up underneath it. And my impression here is that I'm not too surprised that silver fell back, because gold didn't really run earlier this week with silver, and they tend to be correlated. So it looks like silver kind of just got ahead of itself right here. It kind of like made a false breakout, or it fell back down. I think some of the miners still look really good. I took a position in AG, and the way that I put this one on, let's look at AG, and I'll show you real quick something similar to what I did. I don't know that we'll be able to reconstruct it exactly. What I bought was bought an AG option, I think when AG was at 20, it was around 20. I bought it near the low of the day here, 21. So what I probably had on was, I'm going to show you guys an option structure. I call it the Nike swoosh. And so I'm going to go out to July. I'm going to buy what at the time was an out of the money option, and we'll take a look at the price chart. This was an at the money option at the time that I bought it. And then what I also did, the reason this gets the Nike swoosh, is I bought a short dated put with it, short dated relative to the at the money call option. So that's a much longer duration. And now we're going to go into the combo builder here, and I think the one I had was 2 points lower. So it might have been a 19. And again, I'm just guessing. I don't remember exactly what I had. So, I put that as a sell. That's why that looked funny. It's not that. It's a buy. All right, and when I zoom out on this, you'll see the Nike swoosh. So maybe that's a little far. Yeah, if you look at that, it's kind of like a swoosh. And this isn't going to show you exactly how it looked when I had it on, because we can't go backwards in time. But what happened is I put on this trade, and I'll show you, fast forward a day or two, and you can see how this ages. So it ages back behind a little bit. So as you can see, AG kept going down. And so what happened is I found myself with a trade that was flat, and because the put kicked in. And so what I did is I actually rolled it down, and I don't have a trade on here where I can show you the roll tool, but I essentially had all my money back because it fell down, and the put became more valuable, the call became less valuable, roughly equivalent. So what I was able to do is take that same money, and I rolled it into, on the calendar, just lower strikes. I essentially rolled it down on strikes. Don't have a really easy way to compare this, But let's just look at what I rolled it down to. I think I did it right here near the open where AG was $18. And so I got to essentially for free roll this options position down to one that's at an 18 strike to get started instead of a 21 strike. However, the implied volatility is even higher, I think, at this point. So overall, the options are more expensive, and that it does affect things when volatility comes back down. But let's just take a look at these lower strikes real quick. So I just rolled down on strikes. And I think I might have rolled this one out 1 week since I was in there rolling. But let's just take a look at this. So I went to an 18, and then I probably bought a 16. And so you can see here that it's similar. It's that Nike swoosh looking thing. And this dotted line is a projection for February 2nd. And so if we look at tomorrow, you can see like this is probably what I'm going to be looking at I'll be sliding around on this dotted line tomorrow. I hope that the stream is showing this clear enough, but the point is, if silver falls again, if AG, this First Majestic Silver Corp minor, if it falls even lower than tomorrow, then I'll be able to, like say it drops down to 14. Well, I'll be able to do this trick again. And then if silver explodes back higher, if this breakout continues, which I think that it might based on the GLD, when I zoom out on GLD, it looks ready to go. So what's going to happen here is if First Majestic starts to run higher, then I should see, I start riding up this profit curve. So that's the idea there behind this Nike swoosh trade. And then what I'll do if it rides higher is I'll probably just hold this July call, and I may hold it till July. But the February put, what I'm going to do is, while I'm kind of in this danger zone here, you don't want to let this put get close to expiration, because what that does is it puts you down in this hole if the shares aren't really going anywhere. So if we fast forward there, you can see that it's a fairly large loss down there. But what you can do is, and this is, so let's look at next Monday. What day is that? I think it's the 8th. And it's the 8th on Monday. Yeah, the 8th is next Monday. So when we get to the 8th, if we haven't really moved anywhere, my plan probably is to roll that put. And if the price goes higher, what happens is that put gets cheaper and cheaper, and I'll just roll it at the same strike and for almost nothing. And so what that does is, at least, if the price does crash all the way back down, then I'll at least have some coverage. And if it gets cheap enough, I'll actually roll it up to the strike that I'm long, the 18 strike, and just kind of keep rolling it there just for really cheap protection. And it'll essentially, if I keep rolling that higher and higher, I'm locking in profits by doing that. So like as the price takes off, like when you're all the way up here, if First Majestic doubles, that put is going to be basically worthless. And so I can roll it to a higher strike for almost nothing and just keep rolling it higher and higher and locking in profits. The higher I roll that put, the more of these profits I'm locking in. And ideally, I want to do that for pennies. So like if you look down here at these puts down here, this is the kind of thing I'm talking about. By the time you're looking at rolling a put that has a bid ask that's like 30% of the price, well, why not roll it up and just keep rolling it week to week. I tend to like to keep these about 3 weeks out. So anyway, I think we're gonna end the stream here. Keep it pretty short because I had a phone call earlier and we haven't eaten dinner yet, and so we're gonna get going on dinner. But anyway, thanks for joining, Micah, and thanks to the audience for anyone listening in. And we'll be back tomorrow. Bye.